Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel Accounting Buddy. In today's video of part 3 in the accounting equation series, we will review the accounting equation and dive into another illustration. Additionally, we will explore how items like outstanding expenses, prepaid expenses, accrued income, and unearned income impacts the accounting equation. We will also work through 4 practical examples to identify the missing elements among the 3 key components of the accounting equation: assets, liabilities, and equity. So grab a seat, relax, and watch the full video to become an expert of accounting equation. Let's get started. The accounting equation is a fundamental principle in accounting that expresses the relationship between assets, liabilities, and equity of a company. The principle of accounting equation is based on dual aspect of accounting, which means that every business transaction will always have two aspects, debit and credit. It also means that for all business transactions, for every debit there is a credit of equal amount, and for every credit there is a debit of equal amount. It also means that the total amount which business owes to the outsiders plus the owners will always be equal to the assets owned by the business. We can express this understanding into a mathematical equation displayed on your screens. Assets are always equal to liabilities plus owner's equity, or this equation can also be expressed as owner's equity is equal to assets minus liabilities. This relationship is known as accounting equation. Just to repeat and conclude what we have learned in the previous slide, always remember to find out the impact of a business transaction on the accounting equation, identify the bucket of the accounting equation it is affecting. Following the two-step approach through which we have analyzed and identified through 4 business transaction examples in the previous slides. That is, whether it is affecting the assets or liabilities or equity. And by now, we very well know what are assets. They include both current assets like the cash, bank receivables, prepaid expenses, etc., and also non-current assets or fixed assets like plant and machinery, building, furniture, etc., owned by the business. And the liabilities include creditors, outstanding expenses, bank loans, etc. Owners' funds include capital contribution and profit earned or loss incurred by the business. Also remember, assets are always have a debit balance. If the value of asset is increasing, debit them, and if the value of the asset is decreasing, then credit them. If left hand side of the accounting equation is debit and is equal to its right hand side, that also means that the liabilities and the capital will always have a credit balance. If the value of the liabilities or the capital increases, then credit them, while if the value is decreasing, then debit them. Always remember this equation and its fundamentals. Old balance of the accounting equation brought forward is displayed on your screens. Now the transaction T4 on your screens is Tolly sold goods costing $40,000 for $100,000 at a discount of 10% and received $10,000 in cash and the balance in his bank account. Let us figure out the impact of 10% discount. Hope you remember the term trade discount we learned in chapter 2 basic accounting terms video. Since 10% discount in this transaction is a trade discount, the revenue will be recognized net of trade discount and therefore the payment of $90,000 will be received. 10,000 in cash and the balance 80,000 in bank. Let us now figure out the profit of the transaction. If we deduct $40,000, which is the cost of the goods, from the net revenue of $90,000, there will be a profit of $50,000.
Now we have all the information and the numbers required for the accounting equation formation. Now, if we analyze the transaction, four accounts will be affected with this transaction: cash, bank, stock, and capital. Cash, bank, and stock all are assets. Therefore, their effect will be on the left hand side of the accounting equation, and the effect of the profit earned will be on the capital, which is on the right hand side of the accounting equation. Cash will increase by $10,000, bank balance by $80,000, stock will be reduced by $40,000, and the capital will increase by $50,000. New balance of the accounting equation: on left hand side we will have the cash of $20,000, bank balance of $115,000, stock $25,000, furniture $5,000, making a total of $165,000 of the total assets on the right hand side of the accounting equation. We have $40,000 of liabilities and a capital of $125,000, which is again a sum total of $165,000 on the right hand side of the accounting equation. Transaction T5 on your screens is $1,500 of the rent is paid by check, and a business petty expenses of $500 are paid by cash. If we analyze this transaction, three accounts will be affected by this transaction, which are cash in hand, bank balance, and capital. Cash and bank, being the assets, will affect the left hand side of the accounting equation, and the capital will affect the right hand side of the accounting equation. Cash will be reduced by $500 because the petty expenses are paid by cash. Bank balance will be reduced by $1,500 as the rent is paid by check. And capital will be reduced by $2,000 as both the rent and petty cash expenses will reduce the profit of the business. Post T5 transaction, the new accounting equation will have a cash of $19,500, bank balance of $113,500, stock of $25,000, furniture of $5,000, totaling to the total assets of $163,000 on the left hand side of the accounting equation. And on the right hand side, we have $40,000 of liabilities and $125,000 of capital. T6 transaction on your screen is 25% of the depreciation is provided on furniture. If you analyze this transaction, the two accounts which are getting affected by this transaction are furniture and the business expenses, which will affect the capital. Furniture, which is an asset, will affect the left hand side of the accounting equation, and depreciation will affect the capital on the right hand side of the accounting equation. Furniture value will be reduced by $1,250, and so as the value of the capital. Post T6 transaction, the new accounting equation will have $19,500 of cash, $113,500 of bank balance, $25,000 of stock, $3,750 of furniture, totaling to $161,750 of total assets on the left hand side of the accounting equation. And on right hand side, we have liabilities of $40,000 plus the capital of $121,750, again making a total of $161,750.
Let us now learn the effect of adjustment transactions on the accounting equation. First, let us talk about outstanding expenses. Let us have a quick recap. The business expenses which are incurred and are related to the current accounting period but are not paid till the end of the accounting period are called outstanding expenses. Say the old accounting equation balance assumed is displayed on your screens. The T1 transaction is staff salary due but not paid is $15,000. This is a transaction of an outstanding expense. Let us understand the effect of this transaction. Salary is a business expense and it will reduce the profits of the business, and hence the capital will get reduced. Since salary is not paid till the end of the accounting period, create a new column outstanding expenses on the right hand side of the accounting equation. The effect of this equation will be on the liability and capital, which are both on the right hand side of the accounting equation. The outstanding expenses will increase by $15,000 and the capital will reduce by $15,000. Post the outstanding expense transaction, the new accounting equation will have 50,000 cash, 30,000 fixed assets, totaling to 80,000 of the total assets. And on the right hand side, we have 15,000 of liabilities and a capital of 65,000. Let us now learn how a prepaid expense transaction will affect the accounting equation. Quick recap. The business expense paid in advance for future period which are not yet due are called prepaid expenses. Say the old accounting equation balance assumed is displayed on your screens. The prepaid transaction T1 on your screens is rent for next 2 years amounting to $24,000 paid in the current accounting year by bank transfer. Let us understand the treatment of this transaction. Since $24,000 is paid via bank transfer, it will reduce the bank balance and create a new column on the left hand side of the accounting equation for prepaid expenses. Prepaid expenses are current assets. Both bank and prepaid expenses being assets, it will have an effect only on the left hand side of the accounting equation. Bank balance will be reduced by $24,000 and the assets will increase by $24,000. Post T1 prepaid transaction, the new accounting equation balance will be 51,000 cash, 24,000 prepaid expenses, 70,000 of fixed assets, totaling to a total assets of $145,000 on the left hand side of the accounting equation, and on right hand side we have $15,000 outstanding expenses and a capital of $130,000. Let us now learn how the accrued income will affect the accounting equation. A quick recap. The income which is earned but not received in the accounting period is called the accrued income. Say the old accounting equation balance assumed is displayed on your screens. The T1 transaction of accrued interest on bank fixed deposit for the current accounting period is $2,500. Let us now understand the accounting treatment of this transaction. The amount of accrued interest will increase the profit of the business and hence it will increase the capital. Create a new column on the left hand side of the accounting equation for accrued income. Since accrued income is an asset, this transaction will increase the assets by $2,500 and capital also by $2,500. Post this accrued income transaction, the new balance of the accounting equation will be 75,000 cash, 2,500 accrued income, 70,000 fixed assets, totaling to a dollar 147,500 of the total assets on the left hand side of the accounting equation, and on the right hand side we have $15,000 of liabilities and $132,500 of capital. Let us now learn how the income received in advance will affect the accounting equation. Quick recap. The income which is received but not earned during the accounting period is called the income received in advance. Say the old accounting equation balance assumed is displayed on your screens. T1 transaction of commission received in advance is $20,000 by check. Let us understand the accounting treatment of this transaction. Since there is an inflow of money in the bank, bank balance will increase and create a new column on the liability side of the accounting equation for unearned income. Bank balance on the asset side and unearned income on the liability side will be affected. Bank balance will increase by $20,000 on the asset side and unearned income will also increase on the liability side by $20,000.
Post this transaction of income earned in advance, the new accounting equation will be $95,000 of cash, 2,500 accrued interest, 70,000 of fixed asset, totaling to $167,500 of total assets on the left hand side of the accounting equation, and on the right hand side we have $20,000 of liabilities and 147,500 of capital. Let us learn how to calculate capital or liabilities or asset basis partial business information. Illustration 1 is, if the capital of the business is $9,000 and the liabilities is $4,000, calculate the total assets of the business. We know that the accounting equation is assets are always equal to capital plus liabilities. As per the information given, we have $9,000 of capital and $4,000 of liability. Therefore, the total assets are $13,000. Let us now discuss illustration number 2. From the following information of Mr. Tooley, calculate the total assets of the business. Given information is capital $40,000, creditors $30,000, revenue $150,000, expenses $65,000, and a closing stock of $15,000. Let us first calculate the profit. We know that the profit is equal to revenue minus expenses. Basis given information, we can deduct $65,000 of expense from the revenue of $150,000. We will get a profit of $85,000. We know that the assets are equal to the sum total of capital and liabilities. In this illustration, since the revenue and the expenses are given separately, we need to calculate the profit, and this profit will increase the capital of the business. Therefore, the profit is $85,000 and the liabilities given are $30,000 and the capital given is $40,000. Therefore, the total assets of $155,000 are equal to the sum total of the capital and the liabilities and the profit. Further, the closing stock of $15,000 is a part of the total assets of $155,000. Let us now discuss illustration 3. Tooley started his business on 1st January 23 with a capital of $30,000. On 31st December, his assets were $50,000 and the liabilities were $10,000. Find out his closing capital and the profit earned during the year. From the illustration, it is clear that the financial year starts on 1st of January 23 and ends on 31st December 23. Therefore, let us find out the closing capital as on 31st December 23 from the closing accounting equation position as on 31st December 23. Now we know that the total assets are equal to the sum total of capital and liabilities. Out of the three information of the accounting equation as on 31st December 23, we have the information of the total assets and the liabilities of the business. Therefore, we can calculate the closing capital by subtracting the liabilities from the total assets. Total assets as on 31st December are $50,000 and the liabilities as on the same date are $10,000. Therefore, the closing capital as on 31st December 23 will be $40,000. Now let us calculate profit during the year. We know that if we add profit during the year to the opening capital, we will get the closing capital as at the last day of the accounting period. Therefore, the profit for the year will be equal to the closing capital on the last day of the accounting year, that is 31st December 23, minus opening capital, that is on first day of the accounting year, that is 1st January 23. Closing capital as on 31st December 23 calculated above is $40,000 and the opening capital as on 1st January is given in the question is $30,000. Therefore, the profit for the year is $10,000. Let us now discuss illustration number 4. The capital of Mr. Tooley as on 1st January 23 is $60,000. Creditors as at 31st December 23 are $50,000. Revenue for the financial year 23 is $70,000. Expenses for the financial year 23 are $45,000. Calculate the total capital of Mr. Tooley as at 31st December 23. Now we very well know that if in the opening capital as on 1st of January 23, we add the profit for the year 23, we will get the closing capital as on 31st December 23. Since the profit for the financial year 2023 is not given, let us first calculate the profit for the financial year 23. Profit for financial year 23 will be equal to the revenue for the financial year minus the expenses for the financial year. Now if we deduct expenses of $45,000 from the revenue of $70,000, we will get the profit of $25,000 for the year 2023. Now opening capital of $60,000 as on 1st of January 23 is given, and if we add the profit for the year to it, we will get the closing capital of $85,000.
Let us now answer few questions related to the topics which we have discussed just now. Question number 1. What is the accounting equation? The answer is assets are always equal to liabilities plus equity. Question number 2. What do assets represent in the accounting equation? Answer is assets represent resources owned by the business. Question number 3. What are liabilities? Answer is liabilities are obligations or debts owed to outsiders. Question number 4. What is equity? The answer is equity represents the owner's interest in the business after liabilities are subtracted from the assets. Question number 5. In accounting equation, equity is equal to, the answer is equity is equal to assets minus liabilities. Question number 6. How double entry accounting supports accounting equation? The answer is double entry accounting ensures that every transaction affects at least two accounts, keeping the accounting equation balanced. Question number 7 on your screens is what happens when a business takes out a loan? The answer is liabilities increase and the assets also increase, keeping the equation balanced. Question number 8. If a company earns revenue, how does it affect the accounting equation? The assets increases and the equity also increases. Question number 9. What effects does pay off a liability have on the accounting equation? The answer is assets decrease and the liabilities also decrease, keeping the equation balanced. Question number 10. What role does the accounting equation play in financial statements? The answer is accounting equation translates into balance sheet which shows the financial position of a business. Question number 11. How do dividend impact the accounting equation? The answer is dividend decreases assets and also decreases the equity. Question number 12. How does depreciation affect the accounting equation? The answer is depreciation decreases assets and it also decreases the equity of the business.
In our upcoming video on 28th December 2024, we will cover 50 plus questions and answers on the topic the accounting equation. The questions will be divided into 5 categories as displayed on your screens. This revision video will make you exam ready and will further strengthen your knowledge of the topic accounting equation. If you enjoy the content of my channel and appreciate my teaching style, please like, comment, subscribe and share my channel Accounting Buddy. Don't forget to hit the bell icon so you never miss an update. Thank you and goodbye for now.